Good morning and welcome to you all, my dear friends. Q4 results have started flowing in. One among the first, of course, always one of the best is Tata Consultancy Services, the flagship company of the Tata Group and also the flagship company of the software industry of India. It is one of the best in the world also. It is headed by N. Chandrasekharan as the chairman, K. Kirtivasan as the managing director and CEO, N. G. Subramaniam as the executive director and chief operating officer. Now, first let us take a look at the results. Q4 of last year versus Q4 of current year, like that. Sales have increased from 59,162 crores to 61,237 crores. 59,162 crores to 61,237 crores. It is an improvement of 3.51% year on year and 1.08% quarter on quarter. Operating profit is at 17,164 crores, which is 8.81% up year on year, 4.74% up quarter on quarter. Operating profit margin is very good at 28%, which is a 3.7% increase year on year and quarter on quarter. Net profit has increased from 11,436 crores to 12,502 crores. 11,436 crores to 12,502 crores, which is an improvement of 9.32% year on year and 12.66% quarter on quarter. So, sales improvement and net profit improvement are always there in TCS. TCS almost always never goes backwards. The improvement, however, is a little low only. So, it has grown, it is number one at that stage. The improvement, sales have improved by 3.51% and net profit has improved by 9.32%. Good or bad, it's up to you to say that, but it has always been like that. But if you don't look at the previous quarters, etc., the profit margins, etc., are very, very impressive. EPS is 34.37 on a face value of rupees 1. Now, let us look at some of the other highlights. FY24 order book total contract value at an all-time high of 42.7 billion US dollars. Record Q4 TCV at 13.2 billion. FY24 42.7 billion. Q4 13.2 billion US dollars. Full year revenue is at 29.08 billion US dollars, which is an increase of 4.1% year on year. Constant currency 3.4% improvement. Growth is led by UK and regional markets. By verticals, it is led by energy, resources and utilities by 12.6%. Manufacturing plus 7.3%. Life sciences and healthcare 4.8%. Operating profit margin is good at 24.6%. Net profit margin is 19.3%. Very impressive indeed. There is no doubt. But improvement, not much. Net income is 5.62 billion US dollars, an improvement of 7.8% year on year. Let us look at the FY24 highlights. Client metrics. 62 clients are in the range of 100 million US dollars band. 139 people are there in 50 million plus US dollars band. Now, employees headcount is 6,01,546. Now, the diversity of the employees is 152 nationalities. 152 nationalities. So, employees are there from almost every company. And of them, 35.6% are women. IT service attrition rate is 12.6%, which is rather low only. At one time, it used to be very high. Now, it is low. Now, talent development is very, very good in TCS. Free cash flows in US dollar terms are 5.3 billion US dollars. Shareholder payout is 5.6 billion US dollars in the form of dividends and buyback. So, annual highlights are also very good, and quarterly highlights are also very good. Now they have proposed a final dividend of 28 rupees on a face value of 1. They have always been giving very good quarterly dividends also. Now let us look at the industries which have contributed to the Q4 revenue. BFSI has contributed 31.3%. Consumer business has contributed 15.7%, that is in Q4. Life sciences have contributed 10.9%. Manufacturing has contributed 8.8%. Technology and services have contributed 8.2%. Communication and media 6.6%. Energy resources 5.6%. Regional markets 12.9% rather. Now, what are the regions which have contributed to this development? North America has contributed 50% of the revenue. Latin America 2%, UK 16.8%, Continental Europe 14.6%, Asia Pacific 7.8%, India 6.7%, MEA 2.1%. TCS is developing product platforms also periodically. It has got very good R&D for developing these things. One of the foremost is the TCS Banks, BANCS. It caters to banks and financial services. A great product, no doubt. It is preferred by many banks here, India and abroad both. Then TCS Ion, it is a virtual learning platform for educational institutions. Then Ignio, leading cognitive automation software for enterprise IT and business solutions, Ignio. TCS Add, a platform for digital transformation of drug development and clinics. TCS Hops, plug and play business platform for subscription-based services. Then TCS Twins, AI-powered system to help stimulate and optimize enterprises. TCS Optimera, TCS Omni Store, Mastercraft, Xyle, and so on. Now it is developing AI cloud. AI cloud business is a very good thing, latest one. So it is that is going on very well. Essentially, the brand value of TCS is very, very good in the eyes of all corporates across the world. So if they want something major development, one of the foremost software developers preferred by them is the TCS. So geographical concentration also we have seen. Dividend payout is always very high in TCS. Research and development is very, very good in TCS. So if you look at the patents, it has developed 5,200 patents, but has been approved 1,350. So a lot of patents are still pending for approval. R&D is very good. R&D expenditure is 1,867 crores. So client base contains a lot of world's Fortune 500 companies and other big companies. $100 million plus, that we will see. So the company has bought back some more than 4 crores of shares in December 23. Bought back. So to that extent, the equity comes down and dividend percentage will increase. Now the market cap is 14,16,735 crores. The 52-week range of price is 3,005 to 4,254. Currently it is around 3,862, something like that. 3,900, let us take it as that. ROCE is very good at 64.3%, ROE 1.5%, face value 1 rupee. Price curve, if you see that, in May 23 it was 3,100, currently it is at around 3,900. Improvement is there, but was it ever a multi-bagger? No. ROCE has been improving, ROE has been improving, ROA has been improving. Net profit and net profit margin both quarter on quarter and year on year have been improving. Company has absolutely no debt, almost no debt. Increasing revenue every quarter and strong cash generating ability. See, not only the revenue but cash generating ability also is improving. Annual net profits are improving, book value is improving. FIIs have been increasing their shareholding. Brokers have upgraded their recommendations and the target price also. Analyst rating, if you see that, it is always buy. If you look at the shareholding pattern, promoters pledge is very negligible, 0.48%, maybe a technical one actually. 0.48% pledge is there. Promoters have increased their holding from 72.3% to 72.41% in December 2023. Mutual funds have increased their holding to 3.51%. FIIs have increased their holding to 12.46% and institutional investors have increased their holding to 22.54%. Now, price performance, if you see that 1 week minus 1.87%, 1 month minus 8.21%. So, the last 1 month there was a reduction. 3 months, no reduction, no improvement. 1 year, 21.45% increase. So, reasonable increase for a software company of this caliber, but never a multi-bagger. So, sales have been growing, profits have been growing over the last 10 years. Always it is growing. Return on equity also is reasonably good. See, we are talking in absolute terms, means it is very, very, very good. But if you are talking in terms of improvement, it is crawling. It is crawling like this. We now are like this. So, deal wins are record. We have seen that in Q4 also there was good record wins. In the whole of FY 24 also record deal wins were there. So, the management is very, very satisfied with their performance. So, TCS has done well in absolute terms, but in comparative terms, as I said, it is crawling and never giving huge improvement for the investors. Now, it's up to you. TCS is a very great company, there is no doubt about it, but that is in absolute terms. In improvement terms, it is crawling. Thank you for listening. Now you take your decisions. Now Q4 is going on. So I will be back with you with various company results. Thank you.